Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Thursday, the 15th of May, Bull versus Bear webinar. Steve Miley here on the Call for Trade Day. Welcome to the Trade Day team. Not much to go through here today. We will cover everything we need to. It's been very quiet on the macroeconomic, fundamental, geopolitical side over the last 24 hours. A few things happening, but not really impacting markets. Very, very narrow range yesterday. Very quiet session yesterday. Markets dipping slightly today. Wouldn't be surprised if we have a slight rebound, but not really expecting too much, although the data is really front and center as we go into today, alongside the meeting that we have in Turkey between Ukrainian and Russian officials. But it looks like it's going to be more low-key than potentially had hoped. So going into today, really the focus now on the US data. We do get the PPI inflation data, producer price index, but really more of the focus, I think, is going to be on the retail sales data that we get. So that's in just under 1 hour's time. So we get continuing jobless claims, not usually a big number, weekly data. Get that PPE data, and then the core retail sales and the headline retail sales data. Also get Philly Fed manufacturing index, but really the focus, I think, is going to be on retail sales, watching out for that. And then I remember last month we saw the retail sales spike higher, and that was on the basis of expectation of potential higher prices because of tariffs. So let's see if that's dropped back to some kind of normality. So watching out for retail sales. Powell is also speaking 8:40 Eastern, so watching out for that. And we also have some further data a little bit later through the day. 9:15 industrial production and business inventories and retail inventories at 10 o'clock Eastern. So watching all of those. Bar is also on the wires at 2:05 this afternoon Eastern time. So busy-ish, but I mean, really the focus on retail sales data. You know, Powell's spoken quite a few times recently, but we're obviously always going to watch Powell. But he hasn't really given us too many clues in here recently. Very much they're on wait and see mode from the Fed. On the earnings side, so we've been saying this, we're coming towards we're past the main earnings, and we've still got stuff dripping through though. Walmart today. You see very, very slight beats here on both the EPS and revenue, not really impacting the major indices in here this morning. On the Newswires overnight, let's take a look at the morning briefing Americas. Mostly the focus on Trump's tour of the Middle East, doing various deals in here, said deals being done with Saudi Arabia. He's talking about a deal. India has offered a deal. Willing to literally charge no tariff, he said, and also potentially an agreement with Iran as well is being put out there. So that's all happening. Ukrainian-Russian breakthrough unlikely today because fairly low-level officials going to Turkey, certainly from the Russian side. So that's not really expecting too much there, but who knows? We might get something. Okay. So that's where we are at with all those geopolitical events. So stocks in here are very kind of quiet yesterday, sideways, narrow range and slight dip. I mean, it is a slight dip this morning. Risk appetite fading side. We've had that kind of really firm boost the first part of the week, Monday, Tuesday, where we had the US-China trade deal news from over the weekend. That sent us higher on Monday, and then Tuesday CPI data better than expected, again higher. Yesterday was a wait and see, cooling a little bit as it says, and just fading really, waiting for the next impetus in here. So market's kind of a little bit in wait and see mode. Oil has gone significantly lower in here today. Now that should be a kind of a slight boost in here for stocks. Oil often seems like almost as a cost, a tax on the global economy. So oil going lower should assist stocks, but at the moment not really doing too much, and that's on hopes of the potential something going on, some kind of deal with Iran, and then obviously a deal with Iran leads to potential excess supply of oil, and then sending the oil price lower. US stock futures slide, but it says slide. But I mean, given the amount we're up this week, it's just a very small dip, to be quite honest. Tariff rally eases. United Health has gone lower in here on news. Oil exchange drop as Trump says US is closer to deal with Iran. Oil dives on US-Iran hopes as stock surge stalls. Treasuries slip again as traders trim back bets on Fed rate cuts. So we've been speaking about this recently. come to the interest rate market shortly. But Treasuries in here going lower in price again yesterday, higher yields in here, and higher yields. Not that actually we're looking for interest rates to go up, but less chance that we're going to get Fed rate cuts, or fewer Fed rate cuts potentially going into the year. Powell's lean to job market under Microsoft and Fed's revisit strategy. So a kind of shift in potential strategy in here from the Fed. What else do we have? Asian stock indices on the overnights. We're about 1% down on the Nikkei and 0.8 on the Hang Seng overnight. This morning on the European bourses, we see the UK FTSE up just under 0.2, with the German DAX pretty much unchanged and 0.2 down on the CAC. And if we look at the US futures this morning, it's hardly a plunge lower given the gains we've seen. Around 4 to 5 tenths lower for the S&P 500 and the NASDAQ so far today. Turning our attention to the interest rate markets, I'm going to just swish through this because there's really not too much to say than what we said before. Pretty much no chance now on a rate cut in June, and little chance, only a 63% chance we're still unchanged by July. More likely we're going to get the first rate cut in September. 30% chance that rates are still unchanged in September. So 70% chance basically we have at least one rate cut by September. And if we go into the end of the year now, if we go to December, we'll see that the biggest chance here, there's only a 30% chance, there's actually a 30% chance we only get one rate cut, but we're like 67% chance in here, 68% chance that we only get two rate cuts by the end of the year. And you can see bond yields continue to track higher. Back up to that spike that we saw on concerns when the bond market almost looked like it was breaking in, and real concerns about the tariffs that were soon mitigated by the pause in tariffs. And the real fears about recession and about the US bond market in here. But we're back up to those kind of levels in here. And I mean, it's not as threatening as it was with this surge high that we saw in yields. But nevertheless, yields going higher. And in some ways, it's an echoing that the market is less concerned. So remember, this is bond prices going down, continue to go down right the way across the curves, 30-year, 20-year, 10-year. Less reason to own bonds. Bonds are less because less chance of a recession, and also so less reason to own bonds for as a safe haven, but also fewer interest rate cuts expected. So the short end also going significantly lower, because we're expecting fewer interest rate cuts. Stocks remain positive, sideways yesterday, bullish momentum intact in here, and a sideways session we can see on the charts here. A really narrow range yesterday, super narrow range yesterday. And also we had a slight dip in here, but it's a bit of dip and a rebound already this morning on both the ES and the NQ. Slight nudge actually higher in the NQ yesterday, but still a very narrow range, and pretty much similar today in here, just dipping and rebounding on the overnights. And you'll see on the 30-minute chart, it really is having had there's the bull gap that we saw on Monday and the surge higher Monday, and then higher again after the CPI data. Since then, the market's just been in a holding pattern, pretty much sideways in here with a slight dip this morning, but dipping and rebounding. So sideways here also for the NASDAQ. Underlying themes for me stay bullish. Really, the focus, though, is going into today is going to be on that retail sales data we get now in 51 minutes. So all eyes on that. Keep an eye on that, guys. That could be give us the tail of the tape for the first part of the session anyway today. And then watching anything that might come out from either the talks in Turkey between Russia and Ukraine, and also anything further out from the Middle East from Trump, and any further deals being done, potentially something being done with Iran as well. So watching out for that. Guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. I'm going to wish you all a great weekend as well, because we do have a webinar. The Bull versus Bear webinar will be back tomorrow, but Duncan's going to be taking over tomorrow. So Duncan has your back tomorrow. So I'm going to wish you all a great trading day and a great weekend, and a great trading day tomorrow as well. Take care. Stay safe. Bye.